Got Andrew Webley and Jamie Knowles with me. And we have a lot to talk about on the Smarter Web front. Very busy, eventful week. So we're going to jump right into it. So the big news for this week is that we announced a warrant repurchase offer and completed that offer. And the results have already been updated on our analytics dashboard, and it's quite a result. Jamie, if you would like to walk us through the details on what that warrant repurchase offer was and the results of it, since I know you're quite intimately familiar with the RNS numbers that we put together because you did it.
Yes. So Chris, sorry, Jesse, the internet signal just cut out. Was that to me, was it?
Yes, yeah, to you.
Yes, I beg your pardon. Yeah. So first of all, yeah, a big week. Lots of effort gone in over the last 72 hours into sort of getting this transaction completed. And most importantly, it's been great to be able to finally, deliver some Bitcoin per share to shareholders in a market that's been particularly challenging. So as a recap, we bought back 39 million warrants at a price of 22.5p. That account by around boost our fully diluted 9.85%, and subsequently meant an increase in our Bitcoin yield for this quarter by 10.9%, which took our Satoshis per share from 680 to 755. In order to finance the transaction, we obviously took down a small portion of debt from our Coinbase facility, which is collateralized by the Bitcoin that we hold there. So in aggregate, we now have subsequently 9.5 million sterling of debt, which is comprised of 8.85 that was related to this transaction, and 650,000, which was related to the transaction that we did in March, where we bought 3 million warrants back in exactly the same structure. The key thing is that in aggregation of those two transactions, we've subsequently managed to buy back warrants at an effective 0.68 x MNAV approximately, and reduce our fully diluted share count by just over or approximately 10%. And like I said, that has been responsible for the Bitcoin yield generation this quarter. So, a lot of work's gone into the transaction, but most importantly, important to recognize all the team effort that went into it, and really happy to finally see some more orange going in the right direction on our analytics page.
Yes, absolutely agree. Yeah, to summarize some of the exciting numbers, or the headline numbers, we took on some debt to execute this transaction, or we now have a leverage ratio of 7%, which is considerably lower than the other leading Bitcoin treasury companies. Strategy has about 36%, Strive somewhere in the 40s, and Metaplanet, I think high teens. So we are still have a very low leverage ratio. There's been a lot of appetite from shareholders for us to increase our amplification ratio, and we acknowledge that, and this is a step in that direction. This opportunity, a different way of thinking about this is not quite apples to apples, but roughly equivalent to we had the opportunity to buy Bitcoin at $49,000 per coin, and we took it. And we think that's a good move for shareholders, for the company, and we're very happy that this was possible. We think it's a good deal on both sides. So all of the warrants were from 210K Capital, who has been an excellent partner and supporter of the Smarter Web company. They were excited about being able to help us deliver Bitcoin yield with this transaction, which shows that they are a great partner, and it was a great investment for them. They put capital in to get the Smarter Web company, to IPO over a year ago, and they took that risk, and they supported Andrew and the whole team from the very beginning, and they've returned over a 10x
Yes.
with their capital in just under a year. So it's a great way for them to take some chips off the table, and profit and book that profit, and mutually beneficial with the company, because it's a fantastic opportunity for us to increase Bitcoin per share in the process.
Yeah, and one of the things, Jesse. So just two questions. So first thing to flag is that 210K still remain as shareholders of ours, and you can see that as per the latest regulatory filing, which was in January on our website. They have just over 11%, 39 million shares. And the key thing I think about the transaction is that the whole value proposition of a Bitcoin treasury company is to be able to increase how much Bitcoin exposure one has, and certainly within the equity model, it's how much exposure do I have for one share. Now, one of the biggest challenges that the industry has faced has been, how do we increase Bitcoin per share in a challenging market, i.e. when MNAVs are sub one, or it's particularly difficult for capital markets activity due to, say, the geopolitical situation that's going on. So that, for me, is one of the most constructive things about this particular transaction, is that we've been able to demonstrate how we are able to do that. In our deck, we've outlined other ways, but I think being able to have a tangible case now where we can concretely prove that we are able to do that is very constructive. And the whole point is about how we optimize our capital structure. We're effectively taking on debt at a rate that we believe is below the long-term return profile for Bitcoin, which, if you take Strategy's estimate, is 29% CAGR over the next 20 years.
Yes. Absolutely. And so I think the market generally, even despite the fact that we've said it's possible to deliver Bitcoin yield when you're under 1x MNAV, I think broadly speaking, the Bitcoin treasury company investor landscape hasn't understood how that's possible, or didn't believe that was true. So I think that this transaction actually is pretty unique in over the last year of Bitcoin treasury companies, because it's a very meaningful Bitcoin yield result while under 1x MNAV. And I think it displays that we have this very real ability to engage in transactions like this when we're under 1x MNAV, and we can and will do it in order to deliver Bitcoin yield if the opportunity presents itself.
The only thing I'd add to that, and you've both explained it incredibly well, is that like everything that we've done it with transparency and putting the shareholders first. So if you look at what we've done, we've clearly communicated for several months in the deck that you can do things below a 1 MNAV, just as you can do things above, or in a fairly neutral setting. So we've done it in that way. But then, in addition to the obvious benefits, which are now clearly represented on our analytics page, there's other benefits to the shareholders, in the sense that we've removed that potential market overhang. So immediately you can see the results in the figures, but then looking into the future, the bit that you can't really see is the reduced supply coming into, or potentially coming into, the market. So it's got the obvious benefits, but then it's also got those other benefits that are intangible, harder to see, whatever. But we're so pleased with the transaction, and not only the team, but all of our advisors, and our partner UTXO, 210K, who supported the transaction.
Yes, absolutely. Yeah, it's worth discussing the intangible benefits a little bit more there. In fact, for everyone listening, that a little behind the scenes of how this came about. was actually an idea that was planted by Alex Norris, who will be speaking at the Bitcoin Unconference coming up next month, and introduced to us by Jamie some 8 months ago, I'd say, and he pointed out that this warrant overhang was a bit of a caution flag for many institutional investors, and it'd be great if we could do something to structure a repurchase. And that was 8 months ago, and it was just an ambiguous idea. And over the last 8 months, we've searched for a way to do that and the right time to do that, and it finally came together. So that was probably the first, at least to my mind, first impact that Jamie has had on the Smarter Web company. That introduction and that conversation set this all in motion. And that was 8 months ago, well before he started full time here. Jamie, that to be too
Thanks,
complimentary
Jesse.
to you.
That's very kind of you to mention. I think also one of the things as well that's worth flagging is the fact that I think we've gone a long way to now addressing effectively three of the main concerns that institutions have had around our equity, or why they potentially would not look to invest in our equity. And that was our listing status, our operating business, and the potential overhang issue. And so within the space of effectively 6 weeks or 8 weeks, we've gone a material step to addressing all of those. We've uplisted from Aquis to LSE. We've increased our revenues by 10x through the acquisition of Squarebird, which required 1% of our balance sheet at the time. And we've now effectively removed 42 million of the circa 96 million warrants that were outstanding, including removing the largest shareholder of that. All that was done with transparency and with the benefit of shareholders in mind. So net, I think that puts us in a very constructive position to open the door and have more positive conversations with investors throughout the course of the year.
Yes, that's perhaps a great segue to how the week has gone in the market, and it's been a very eventful week for the share price in the market and our volume. And Jamie, you stay closest to this information. So what has stood out to you this week, and why do you think it's happening?
Sure. So I would say, so the week's obviously been split into two halves. Prior to the Tuesday deadline that Trump had sent with regards to the Strait of Hormuz, going into that, markets were naturally extremely apprehensive. And if you look at the positioning data for that, the market felt like it was split pretty 50-50 in terms of which way it could go. Subsequently, we had a constructive outcome with regards to a ceasefire for 2 weeks, which naturally meant Bitcoin had a small bid to it. Risk assets saw a little bit of a bid to them. But I think what's clear is that the scope of the move has still been fairly constrained, and a lot of that is just due to the fact that it feels very fragile, and there's a lot of naturally investor skepticism and apprehension still around. So when we speak to investors, a lot of the trading that they have been done has been really related around managing core positions or around the hedges that they have around their core positions. I'm not really seeing anyone that's putting a huge amount of new capital to work into the market. So people aren't increasing their overall gross. People aren't increasing their net length in terms of their investment portfolios. So for now, I think we're still going to be, for Bitcoin, in a period of sort of sideways motion, probably within that sort of 66 to 76 range, until we look to get some further sort of update from the political situation.
Yeah, wonderful. And then I guess we lost Jamie for a second here, so we will carry on. Oh, he's already back.
Yeah, sorry.
Yeah, lost you there for a second. Yeah, great. That was a great recap of the sort of macro backdrop that we've been facing this week, and then I'll layer in the next piece, and then Jamie, I'll hand it back to you. But on top of that, this was the first week of the new tax year in the UK, and that, I think, has been quite significant. It turns out, for Smarter Web and our share price. It's been interesting that there have been 2 times that Smarter Web has traded significantly below a 1x MNAV. One being late December, right before the end of the US tax year, which may have meant that there was a lot of tax loss harvesting going on at that point in time, and people were willing to sell well under a 1x MNAV. And the other time has been the last few weeks, which is right before the end of the UK tax year. And so it may be that the same dynamic was playing out with UK tax loss harvesting. And you know, so we got to 0.7 in December, and then in January we saw relief that brought our MNAV up almost to 1.2. And so it's very interesting that, you know, last week we were at 0.7 MNAV, and as of today we're at 0.93 MNAV. So I think it's possible that tax loss harvesting dynamics and the end of that window has meant that the cessation of sell pressure from tax loss harvesting that may be, you know, breathing some life into our MNAV at this point in time. And so I think that's quite a significant development in the market for our share price in particular. And so, Jamie, you've been sharing some great stats on our chat about Smarter Web shares and how we've performed this week, and how much volume or volatility there's been this week. If you want to recap some of that.
Yeah, absolutely. So one of the things that's been great as being part of the LSC is that naturally we are included in a lot more data sets, particularly Bloomberg, which we can use to crunch analytics, not just on performance, but also on volatility, not just volatility on our stock, but volatility relative to other asset classes as well. And that's really, at the moment, what a lot of people are looking at. The market feels like it's one of relativity, i.e. Bitcoin versus gold, Bitcoin versus ETH, sort of intersector pairs as well. And, you know, one of the things that's been particularly attractive is the fact that first, you know, we did a small exercise to crunch some numbers to see, you know, what post the first 30 trading days after being listed on the LSC. So from the 4th of February to the 17th of March inclusive, what our realized volatility had been. And on an average of that basis, we were still one of the highest volatility stocks within the UK. So our realized vol over that period was 114%. There were naturally a couple that were higher than us, but they actually had specific corporate actions. For instance, they may have been involved in a merger or acquisition. There may have been a capital restructuring associated with us, but that fits into the profile that we had towards the back end of last quarter, where we had an extremely high elevated realized vol between 90 to 100%, depending on what time frame that you strike. And once again, the reason why that's particularly important is because the UK equity market in a whole tends to have a very low realized volatility profile, because the majority or a large proportion of stocks are defensive by nature. So we've stated this before, but it's worth saying once again that a large part of the FTSE 100, especially the top 10, are defensive stocks. They are pharmaceutical stocks, they're consumer goods stocks, utilities, tobacco stocks, etc. So there's actually very few tech stocks within the UK index, unlike the US. So for active fund managers that are looking to outperform the index, they need to look for stocks that can outperform. And there's been a lot of work done on Bitcoin and also just within equities that to show by having a small proportion in a stock that has an elevated level of realized volatility, how you can outperform. And so that's something that we're actually very proud of. And naturally, we have to do work on how we educate the market on that. And it comes back to the volatility is vitality theme that is well known within the Bitcoin sector. And as a result of that, our share price has been, when I look at it, share price this week, it's been particularly strong. We never want to attribute share price movements to any particular piece of news, but just looking at it objectively, last time I checked, we were up 22% for the week, which put us at this moment in time as the top performing stock in the FTSE All Share, which is really fantastic to see, and most importantly, just helps to raise awareness, because people see that they then want to explore, who are Smarter Web, what do they do, and this is just one positive part of that sort of feedback loop in terms of building awareness about our equity.
Yeah, and in fact, I think we're up a little bit more than that for the week. We closed last week at 26p. We're currently trading at just over 33p, which by my quick math here is just over 33% gain for the week. So, and of course that volatility we love. We want to show up on the the top 20 risers and fallers as often as we can, gain that awareness that this is a high vol stock that has no stamp duty for 3 years, and is a trader's best friend from our point of view.
Yeah.
So it's good to see that sort of performance and volatility this week.
Yes, and also to be supported by what is healthy volume. People can see what the daily volume has been versus our average daily volume on a 30-day look back, and it's been outsized, which is constructive to see. That means that there's been healthy support. And what's actually been interesting in the breakdown for this week has been seeing more US flow coming through, and so it feels like there could be some US interest potentially starting to creep back into the stock, which is constructive. And last year there were days where the US actually did more volume than the UK line, and there was even a day this week that we saw very good participation from our European line as well. So in essence, it feels like a good mix of flow that's all been constructive, towards healthy volume.
Yes, shout out to John Levy for always producing every day. Produces the volume chart for global volume traded for Smarter Web, and it's been great to see. We had a 5.5 million shares day, 4.5 million shares, and yesterday was 1.5 million shares. That's fantastic. That averages to something like 1% of our circulating shares per day, which is a pretty liquid stock.
And actually, Jesse, if we were going to be constructive on ourselves or thinking about feedback of what we can do better at Smarter Web, that would probably be now, I would say, the next point that institutions, really big ones, look at with regards to, is this a stock that we could invest in, which is the average daily volume, obviously on a notional basis, but also as a percentage of our free float as well. So one of the key things that we want to see is a long-term trend up, that we're able to demonstrate that the volume profile is increasing.
Yeah. Funny enough, a slight benefit of reducing our fully diluted share count is our percent of shares that are trading per day has just gone up because we took care of that. Andrew, I want to bring you into the mix here. Any thoughts on the stuff we've been talking about, or I guess I'll sounds like there are, and then we'll talk about our quarterly in review document, because I think that's something we should make sure to not miss, and we can move on to some of the other things coming up.
Yeah, sounds good. So I'll keep it brief because this leading on to the Q1 update sort of illustrates this point. But we've always said that what we're trying to do is we're trying to advance the company, as best we can, all of the time, every day, every week, every month, every quarter. And when we've been discussing a couple of these things, whether it's the index inclusion or, the uplisting or, some of the other things, another thing came out in the last 24 hours, we're doing all of these things, to improve the liquidity, the volume, the reach, the understanding, all of these things, and the reality is that, one of these things doesn't make a difference by itself, but it's when you add all of these things together and you keep pushing them all every single day, that's how you make a difference. And that's how I believe we can advance from where we are today to where I want us to be in the future. We just have to keep pushing on all of these different things all of the time as a team, with the support of the community, with the support of the whole of the UK and indeed the world, with some of our investors. And that's how we make this thing much, much better than where it is today.
Yes, that's the North Star comes in here and reminds us of what the mission we're on, and it's the result of all of our week to week efforts. Cumulatively adds up and compounds, and that, for me personally, that's what I'm most excited about with the warrant transaction this week, is that knowing that that's an 11% that it's now on the books in terms of increasing Bitcoin per share, that any future transactions that add to that compound on top of, right? So I think that's an exciting part of a Bitcoin treasury company, is that you benefit from every single transaction that's accretive because they compound on top of each other, and adding 11% in one go is a pretty good step. So
that's another reason why a Bitcoin treasury company is probably the best investment, if you like Bitcoin, of course, because of that compound nature of it. So one of the things that I think is perhaps unfair is the wrong word, but difficult with some companies, very cyclical companies or companies that might have, a good couple of years, is there isn't that genuine long-term benefit, but for me, what I love about Bitcoin and now Bitcoin treasury companies, since I first found strategy, is that it genuinely, in my opinion, is an investment that you can hold forever, and that compound effect that you get over many, many years is worth a hell of a lot. And to be fair, not widely understood by the market, away from the people that know about us at the moment. And I don't think, just as you can look at Bitcoin and you can say these are the qualities that make it the best investment to hold for decades, I think you can make other additional arguments on top of the base asset for a Bitcoin treasury company, and there's not, if you think about it, there's not that many investments like that, we don't have to give examples, but if we looked at gold as a good example, that's had a good year or whatever, if you look at it over 20 years or whatever, not so good. So, that's why, me personally, I'm so excited about Bitcoin treasury companies and about pushing Smarter Web to be the leader in the UK, to be one of the leaders in the world, to be the biggest company in the UK, and all of those things, because, all of these actions compounded over time, and time is years, right? It's not weeks. It just makes it very exciting, really.
Fully agree. And that is why we are all here, because the three of us and shareholders who are listening can understand the compound effect. And on top of that, understand that Bitcoin is the asset that you want more of. And you want to measure yourself in Bitcoin. And if there's a arbitrage opportunity to use capital market tools to increase your Bitcoin ownership over time, that's pretty damn compelling. So
yeah, it's great as well. And it's, you can even rephrase it, whenever if you look at the market fit, like, what is the problem that we're trying to actually solve for? The problem we're trying to solve is, how do I get more Bitcoin, or how do I get more exposure to Bitcoin? And that's where the Bitcoin treasury model comes in. And again, the sector, if you consider the summer of last year as the genesis of it, is still less than 12 months old. So there's a lot of work to be done by everyone into explaining that model, and why there is a need for it. And obviously that starts with recognizing Bitcoin as the most durable monetary asset there is, its performance, its role in the portfolio, how you get exposure to it, and then within a specific sleeve, the role of a Bitcoin treasury company. But you talk about the compounding effect of small incremental movements and how they compound. One of the most significant things for me this week was the fact that Morgan Stanley announced the launch of their ETF, which is massive. They're one of the largest asset managers in the world. And to do that at a time when Bitcoin sentiment is still challenged, I think was a very constructive step forward, for the broader ecosystem. So that for me was a big positive this week as well.
Yes. Perhaps
maybe that brings us nicely onto our other positive this week. And
yes.
And I actually met the lady, Amy, I believe her name is, from Morgan Stanley, who's been all over, the videos and stuff this week when I was in Vegas at Strategy World. And, she's so excited and upbeat and looking to the future, and all of these other big financial institutions, including some in the UK, are starting to really see the potential. That's the thing that we see that some of our shareholders don't see. And that's why seeing, the research note that came out, I think it hit my inbox about 9 o'clock last night, UK time, from TD Cowen, who are massive as well. They've been supportive of strategy since pretty much the start. They've got a really good analyst team, really good investment banking team. And to see those sorts of companies looking at Bitcoin and the Bitcoin treasury sector in a positive way, but then also, sort of taking the time to get to know us and looking at us in a favorable light as this small company in the UK, is pretty cool, really.
Yeah, to highlight a little bit about that. So for people who aren't aware, TD has been a crucial investment banking partner for strategy over the last 5 years. TD notes quite proudly, and deservedly so, that they have helped strategy raise $50 billion to buy Bitcoin. And that's pretty phenomenal. And they have established a leadership position as an investment banking partner for Bitcoin treasury companies. And they decided that they were going to double down on that market position that they find themselves in. And so they decided to initiate coverage on a selection of treasury companies, in addition to strategy, who they already cover. So they added 4 treasury companies, one being Ethereum company and the rest being Bitcoin treasury companies. And they were looking for the right set of who should we spotlight, who do we think has a really compelling thesis and positioning. And they selected Strive and Nakamoto, who are big names in the space, and have significantly more Bitcoin than the Smarter Web company. And they selected the Smarter Web company. And I think it's because of our overall story, our positioning in the UK as the clear market leader in the UK. And I think they really liked the story of Andrew's business and the background, and his focus and execution and work ethic too. And so we've cultivated a relationship with them over the last, I don't know how many months that's been, Andrew, 9 months or so.
It's been a while.
And so it's been very cool to see that come to fruition here, where now the Smarter Web company is, a couple months ago, we weren't covered by any major investment bank. We had small coverage from our broker Tennyson. And now we have coverage from Maxim, a New York investment bank, and now TD, who is a much larger investment bank and globally known. And that's another thing that I think matters for institutional investors. A few months ago, we didn't have coverage that they could go find and would put any sort of trust in terms of reputation. And now that TD yesterday has come out and said Smarter Web company is a buy, and we think it's a clear 3x from here over a pretty short time frame. That helps. That's another little thing that really adds to our story and our saleability in terms of telling the story to institutional investors. Jamie, anything you want to add on this? Yeah.
Yeah. Well, I mean, I think the key thing it does is just increase our ability for penetration in markets that we naturally don't have access to. So they have a huge distribution network across North America. We, across our three cells, have our own relationships, but clearly with their backing, they're able to have conversations about the sector, relevant stocks, and hopefully within that, smarter web. And so what we hope is that with sort of any institutional relationship, it will increase awareness of our name. Naturally, that leads to conversations, and then those conversations can then subsequently lead to commercial agreements in whatever form that may be. So I think it's really constructive, very positive, the fact that they were willing to put their name against a company like ours, and we're very grateful to them for the coverage. And one of the things I think is particularly interesting for me, and when I look at it and think, okay, so if I was going to ask the question, okay, so why would a big investment bank like that want to cover a much smaller company than, say, Strategy as part of that research note, or one of four stocks that they've covered? Well, one of the reasons is because they're trying to get both ends of the adoption curve. Any sector has an adoption curve. And if you have Strategy that are at the mature end of that, with their Bitcoin stack, with their product releases, etc., you have MetaPlanet in that acceleration phase, and then you naturally have Smarter Web that's in that early stage inflection point with some very strong UK nuances. Then there's an interesting angle there to see it as an early stage tech stock. And again, none of this is sort of financial advice, but I think that's the positioning that I see it as. And we obviously have a very unique story being based here in the UK. One of the things that sometimes some of the feedback that people give to us is, okay, so we can see your model is very similar to Strategy's model 5 years ago, and then they can see a clear pathway through that. And I think that's why there's that barbell approach in the coverage model, which naturally includes Strive as well. So I feel they've got a really good surface area of the companies involved, and feel very proud of that.
Yeah, I think that is part of the story here, is a certain level of pattern recognition that I think TD as an institution, this is me reading into it, but I think that they see the clarity of our positioning as MicroStrategy for the UK, and they've been very intimately familiar with how successful Strategy has been in the US over the last 5 years. And so I think that's played into them spotlighting, as Lance told us, like they usually don't they don't cover companies as small as us. They usually have to be significantly larger. And another sort of funny behind the scenes bit is, over the last month or so, as Lance has built out his model for us, projections about how we might perform under different conditions into the future. He was calling me up to try to figure out how he could lower the expected outcome for Smarter Web, because the setup was, as he was running the numbers, he was getting more than 10x over 4 years, and for it to be plausible from an institutional perspective, he needed to bring it down. So it's we'll see how it all plays out. Of course, nothing is certain there, but it shows that as they dug in, they got excited about our positioning. So if there are no more further thoughts on the TD, I guess I should cover too that there is a full report out there. We can't share it directly, but we hope that shareholders get their hands on it. Go for it, gentlemen. We look forward to talking about that more into the future. And if anybody is able to surface it, good for you. Moving on to other topics we should cover in the next 10-15 minutes is, Andrew, if you want to reflect on Q1 at all, and then we can talk about upcoming things in that sort of calendar going ahead, and then we'll cover some questions from from the community.
Yeah, so we put out the update when we got to the end of Q1, which is something that we want to start doing at the end of every quarter. I think it's good for us internally to digest on what we've done, what we could have done better, make sure that everything's aligned, in the short term where we want it to be. But I think it's really important for shareholders as well to try and pull it all together because, we live, eat and breathe this, every minute of every day. And I think sometimes for some of the existing investors, pulling it all together is useful, but then even more importantly, pulling that all together in an easy to digest format for new investors, whether that's retail investors or institutional investors, is very valuable as well. And it was a sort of, I suppose there were two sides to the quarter from my perspective. One was that I was very pleased with everything that we achieved as a business, the acquisition, the uplisting, the index inclusion. I think we've set everything up to, all being well, be a good quarter for Q2. But then the flip side of that was that, it's been a tough market. We haven't bought as much Bitcoin as I wanted. We still bought some, 31, I believe it was. We did, we did do some good things, but, the market, and that's the way it goes. The market didn't necessarily reward all of that. But, that saying, the share price is one metric, is very true there. So, apart from, the sort of the pain of the share price for the quarter, it was a good quarter. And I'm hoping that this will be a better quarter, but, obviously we'll have to wait and see. The early signs are encouraging with what we've announced so far, but, people just have to see whether we can keep delivering from here.
Great point. Yes, we're off to a good start. There's much to be done this quarter and through the end of the year in particular, which I know we are very excited about internally, and we can, look forward to sharing more about all that as we go. Some other, I guess actually here's a good sort of segue into we can cover some of the questions from the community, and then we can sort of wrap up with the agenda ahead. But yeah, so we covered the TD report and Andy's request for a copy of it. Sorry, Andy. From Toffee, we had a question of any new merch update plans, in particular ahead of the conference. Jamie, do you want to take that one, or Andrew? That's fair.
Jamie can do that one.
Well, so the answer to that is we are acutely aware of the 1-year anniversary coming up of the IPO at the end of April. And the team have been working very hard to find ways that we can commemorate that and also reward shareholders for their loyalty and support during that time. So we've had a lot of fun brainstorming with ideas about how we can mark the occasion. So without giving too much of a spoiler away, all I would ask is for a little bit of patience. And I think we've got two things that shareholders are going to particularly like, which we look forward to sharing probably in the next week or so. And we'll start to drop a couple more hints. And this is all just part of, the fun coming up to the date. And, I think we all collectively look very much, very forward to sharing that in due time.
What an exciting tease. Maybe everyone lower your expectations a little bit so that we can exceed them. Yeah.
Exactly.
I was going to make the comment of they are, we think, good things, which I hope everyone will like, but manage expectations for everyone. This isn't another 10.92 yield that's necessarily being delivered. But they are good things.
We're not getting Aerosmith to play at the conference or anything like that. So, let's manage expectations. Correct. I'm just excited because I've been involved in the process. Yeah. That's all.
And it's good.
Yeah.
It is a good nod. We are quite aware that the 1-year anniversary is coming up. I've prepared a bit of analysis to come out sort of around that time, which is my form of contributing to that anniversary. So we're thinking about it. Another question from Michael was, do we have any plans to add to the team? How do we feel about current structure? Are we happy with the team as it is, for, I guess implied is for the next year or the next stage of our journey here?
Yeah, so very, very short term, yes, we do have plans, and we've got 2 new people that will be announced in due course. So the first one being a new financial controller who's joining to support Mario and hopefully take on that function from there. So that's good. We've worked really hard to fill the gaps that we think exist. That said, whilst clearly, these couple of things that I'm thinking about are very, very important. We've got a team that's working incredibly well together at the moment. Everyone's enthusiastic. Everyone's focused on the mission. Everyone's working very, very hard. I know I can be slightly unreasonable at what I expect at times, but you just have to get used to it. So yeah, like the team is, I'll always want it to be sort of better, doing more and all these things. But I think, to be fair, I think the team is doing very well at the moment, and these additional ones will, help take it a little bit further forward. But what follows in, I don't know, 6 months, I don't know. It will just be as the needs arise, and we won't create jobs just for the sake of it. We'll bring in good quality people as we need more people. That's the way that I think about these things.
Well said. From Jimmy, we had a fun one. His question was, have we modeled out scenarios for downside environments, or like a 2008 sort of recession, or even a 1970s style stagflation scenario? And have we done that? And I'm bringing that up because I think it's a fun question, because he included 1970s style stagflation scenario, which, from my perspective, we are living through that. And I'd like to note that if you look back at the 1970s, what asset class performed exceptionally well during the 1970s? It was gold. Gold was, I think, a 14x over the course of that decade. And of course, that was in part related to going off the gold standard in 1971. But when inflation peaked in 1980, gold had a 14x over that time frame, which really just means hard assets did exceptionally well in that sort of stagflation environment where there was high inflation and not much growth. And guess what I think the UK is living through right now? There's not much growth, and I think there's more inflation than we're being told there is. And you all feel that when you go to the grocery store. And hard assets do well in that kind of environment. Gold has been that historically, and now there's a better hard asset in the world, and that's Bitcoin. And so that's part of why we are, so excited about our positioning and our mission to build a balance sheet on the best hard asset for these times. And so that's why I cherry picked that one from Jimmy to bring that up. And separate from the hilarious response from ADIQ about alien invasions should be another scenario we should model for. All that to say, Jimmy, I think that we have modeled out a conservative scenario of here's how much cash we need for the coming year plus, and we're constantly viewing it in terms of that. And I think we are, especially with the Squarebird acquisition, putting ourselves in a better and better position for weathering tough environments. And what has the last 6 months been? I think it's been a tough environment for Bitcoin and Bitcoin treasury companies, and we're doing okay despite all that environment, especially compared to some other Bitcoin treasury companies that have had to sell Bitcoin, and we are nowhere near that kind of need. And as Andrew points out, he'll cut off his arm before he does that. So Yeah, anyway, just to address that question.
I think that's
and
one
most
thing that
importantly,
people. No, go for it, Jamie.
No, I was just going to say, most importantly, thank you for the difficult questions, because, you know, naturally we answer some of the fun ones here, but we also want to address the tougher ones as well. I think that's really important. And it's important to note that the team sees all questions and we'll always try to answer them where appropriate. But for some of the questions, if we don't respond, it's very likely that we're unable to respond for like regulatory reasons, etc. It's never because someone is avoiding you, and we'll always try to be as transparent as possible and come back, whether it's via this platform or in written format. So appreciate all the questions that get asked.
Yeah, and I was just going to say that, you know, it leads on from the answer that I was giving before, but it applies to Jesse's question that he answered very well as well. You know, the advantage of having a team that understand Bitcoin, understand capital markets, have aligned their lives with both, you know, that understand how to run a business, all of these different things that are so important that make up, you know, a Bitcoin treasury company. You know, internally, you know, we debate these things to a length that you wouldn't believe. You know, what can go wrong? You know, we have so many ideas that people will never see, because obviously we can't disclose things until a certain point. But you know, we'll debate them, sleep on them, debate them, sleep on them. You know, and you know, it's not necessarily a bad thing that some things take time. You know, like if you look at the warrant deal that came together this week, that came together incredibly quickly. So we move quickly, as people have seen, but we take our time to get to a position when we can then move quickly, because, you know, I won't compromise, you know, the sort of the medium to long term mission, you know, for a quick win. No way. So yeah, please, you know, Jesse explained it very well, but please rest assured that, you know, we debate everything, not quite to 80s, you know, aliens rocking up at Aztec West, but almost to that degree, we debate everything.
Yes, and it is good to highlight that things take a long time, and then they happen very quickly. 8 months in the making for this warrant repurchase offer, and then set in motion. You know, within 24 hours, we had gone from an email in my inbox to us cementing a deal. So, you know, and that's after 8 months of hoping for, you know, the right circumstances to exist. So yeah, I think there's some great questions this week. So, you know, thanks to the community for spotlighting, you know, a variety of topics. Sorry we didn't get to all of them, but keep them coming for next live stream. Andrew, Jamie, any final thoughts? Otherwise, we can wrap it up here.
So
no, all good from me. Yeah.
Yeah. So you know, obviously it's always nice to say, you know, thank you to everyone for all of the support. You know, we do have quite a busy week coming up next week. I've got 2 days in London. It'll just be Jamie and me, because Jesse will be over in Texas for that week. You know, we try and do them together, the three of us, you know, when we're going to see institutions or partners or whatever we're doing. But, you know, I'm quite looking forward to that. The days are going to be quite intense, but hopefully productive. You know, obviously, you know, in the context of, you know, things taking time as well. And, you know, we'll just try and have another good week. Like, I think, you know, if I look back at this week, you know, the warrant deal, the TD thing coming out, and all of the other things that we've talked around, some of them, I think that's really, hopefully we push on a little bit more.
Yes, agreed. I think a great week. Hopefully, we can turn it into a great quarter overall, and finish out with a great year. I'm very excited about you know, the future of amplified Bitcoin in the UK, and for that matter, should also mention you know, that we have the Bitcoin Unconference in Bristol coming up end of next month, 29th of May. And tickets are still available for that. And we've got a great lineup of Bitcoin treasury company leaders globally, and and just about everybody who's involved in Bitcoin treasury companies in the UK coming together to talk about that in Bristol. Should be an exciting day for really firming up what is an emerging industry in the UK in particular, and very excited to be there and have that event. So you can learn more about that on our website if you're interested in finding out more. Thanks everybody for listening, and we'll do another one of these in a few weeks. Let us know any comments, feedback, and look forward to next time. All right, thank you all.
Thank you very much.